There's an old photograph hanging in David's parents' living room. The colors have faded. The edges are worn. Yet if you ask David what the most valuable thing in that house was, he wouldn't point to the television or the furniture. He'd point to that photograph. Because it captured something that's become surprisingly rare. A future that once felt predictable. The photo was taken in the spring of 1994. His father stands proudly outside a modest brick house. 2 bedrooms, a tiny backyard, fresh paint. In one hand, a small ring of keys. In the other, baby David. It wasn't an extraordinary home. It was proof that ordinary people could build an ordinary life. Growing up, David passed that photograph almost every day. Sometimes his father would smile, point toward it, and say, "One day, you'll have one of your own." Not a mansion, not a luxury, just a place to come home to. Looking back, David realized that sentence was never really about a house. It was about certainty. His parents belonged to a generation that believed life followed a simple sequence. Study hard, find a stable job, save your money, work honestly. Eventually, you'll own a home. Maybe not quickly, maybe not easily, but eventually. That wasn't just financial advice. It was the quiet promise society made to millions of ordinary families. David inherited that promise. It appeared everywhere. Family conversations, television commercials, newspaper headlines, even the unspoken assumptions adults passed to their children. Owning a home wasn't simply a financial goal. It was the moment you officially became an adult. So David followed the plan. He graduated, built a stable career, drove an old car, skipped expensive holidays, saved whenever he could. By 29, he believed he'd done everything society had asked of him. He wasn't chasing luxury. He simply wanted what his parents had always considered normal. Every weekend, he visited open houses, bright kitchens, quiet living rooms, empty bedrooms where he imagined a future family. For a few minutes, each house felt like it already belonged to him. Then another email arrived. "We're sorry. The seller accepted another offer." At first, he blamed bad luck, then bad timing. But after enough weekends, the pattern became impossible to ignore. He wasn't losing to people who worked harder. He was losing to something he couldn't see. Eventually, David booked an appointment with a mortgage advisor. He arrived carrying years of preparation, pay slips, bank statements, tax records, savings. Everything he believed proved he had earned the right to buy a home. The advisor opened the folder, typed quietly, then looked up. "How much are you hoping to borrow?" David smiled. "I thought the real question was how much I could afford." The advisor smiled back. Then he turned the monitor around. Rows of numbers, interest rates, monthly repayments, projected income. 30 years of David's future compressed into a financial model. Then he said something David would never forget. "What matters isn't today's price. It's what the system believes you can borrow." David nodded, though he wasn't sure he understood. Minutes later, he stood alone in the parking lot holding his pre-approval letter. The city looked exactly the same, but the story he'd believed his entire life no longer did. One question refused to leave him. Why did the bank seem more interested in the next 30 years of his life than everything he had already achieved? Without realizing it, David had stopped asking, "Can I buy this house?" He had begun asking a far more dangerous question. What exactly was the bank buying? That question refused to leave David. It followed him to work, through coffee breaks, and into the quiet moments before sleep. The houses hadn't changed, but the question had. He was no longer asking whether he could afford a home. He was asking something much more fundamental. Why had buying one become so difficult in the first place? Like most people, he started with the obvious answers. He watched interviews, read articles, listened to economists, real estate agents, politicians, and friends. Everyone seemed to have an explanation. The surprising part was that almost all of them sounded reasonable. The first was the story he'd heard his entire life. There simply aren't enough houses. More people, not enough supply. Prices rise. Simple. Logical. For a while, David accepted it. Then one Saturday, driving home from another disappointing open house, he looked up. Construction cranes filled the skyline. Apartment towers were rising everywhere. Entire neighborhoods were still being built. The city wasn't standing still. It was expanding. If the problem was only supply, why was affordability getting worse instead of better? For the first time, the explanation felt incomplete. So David kept looking. Maybe it was investors. Homes becoming financial assets instead of places to live. It was an appealing explanation. Every complicated problem feels easier when it has a villain. But the evidence refused to cooperate. Some cities with very little institutional investment had seen the same surge in prices. Others imposed strict regulations and still struggled with affordability. Once again, the explanation described part of the picture, just not the whole picture. David continued searching. Foreign buyers, cheap money, government policy, population growth, inflation, restrictive zoning, greedy developers. Every explanation explained something. None explained everything. One evening, his dining table disappeared beneath newspapers, research papers, housing reports, and economic charts. Different experts, different conclusions, different certainty. Yet none of them seemed dishonest. They were simply studying different parts of the same machine. It reminded David of the old story about the blind man and the elephant. One believed it was a tree, another a snake, another a fan. None were wrong. None could see the whole animal. David leaned back and looked across the table. Dozens of explanations, countless statistics. Still no answer. Then a sentence returned to him, not from an economist, from the mortgage advisor. What matters isn't today's price. It's what the system believes you can borrow. At the time, it had sounded ordinary. Now it sounded like the missing piece. For the first time, David noticed something almost unsettling. Every article was trying to explain the price of houses. Almost none were trying to explain the price of money. He closed the last folder and switched off the light. Maybe everyone had been looking in the right direction, but at the wrong object. Maybe houses had never been the mystery. Maybe money was. The next morning, David stopped studying real estate. He started studying credit. Without realizing it, he had stepped through a door most people never even notice. Because once you begin asking where purchasing power comes from, the story is no longer about housing. It's about the invisible architecture of modern civilization. The next morning, David stopped searching for houses. He searched for a single word: mortgage. It was a word he'd heard his entire life. Friends talked about getting one. News anchors blamed rising mortgage rates. Banks advertised them every day. The word felt familiar. Yet David realized something unsettling. He had never actually asked what it meant. Most explanations described how a mortgage worked: a loan, interest, monthly repayments. Very few explained what it really was. Those aren't the same question. One evening, David printed his mortgage agreement. 43 pages, dense legal language. He spread the papers across his dining table and began reading, not as a home buyer, but as an investigator. At first, everything looked ordinary. Interest rates, repayment schedules, insurance, default clauses. But the deeper he read, the stranger it became. The contract spent surprisingly little time describing the house. Almost every page described him, his income, his obligations, his future, his promises. David stopped reading. If this contract wasn't really about the house, what was it about? He stepped away from the table and looked out the kitchen window. Then he imagined the transaction from the bank's perspective. The bank wasn't buying bricks, or land, or a roof. None of those things would make the monthly payments. Only one thing could: David. Or more precisely, the person David would become over the next 30 years. That realization changed everything. Imagine someone offered to buy the next 30 years of your working life. Not your house, not your car, your future. How would you decide what it was worth? David looked back at the contract. 30 years, 360 monthly payments, 360 promises, one signature. Suddenly, the pages no longer looked like paperwork. They looked like a claim on a future version of himself, a person who didn't exist yet. For most of human history, that would have been impossible. If you wanted a larger home, you saved. If you wanted more land, you worked. If you wanted a better future, you waited. The future couldn't be spent, because no one knew how to measure it. Then humanity invented something extraordinary. Not electricity, not the steam engine, not the internet. Credit. For the first time, trust could be transformed into purchasing power. Tomorrow could be spent today. That simple idea changed everything. Cities expanded, businesses grew, factories were built, families moved into homes years before they could fully afford them. The house itself hadn't changed. Only David's ability to compete for it had. At that moment, the mortgage stopped looking like a loan. It started looking like a machine capable of pulling tomorrow into today. David sat silently for a long time. Then one final question appeared. If credit could change what one person was able to pay, what happened when it changed what millions of people could pay? And where did all that purchasing power actually come from? The answer would force David to question something even more fundamental than housing. It would force him to rethink money itself.
David couldn't let the question go. If credit could expand purchasing power, where did that purchasing power actually come from? Like most people, he had always believed a simple story. People saved money. Banks held those savings, then lent them to someone else. It sounded obvious. It also wasn't entirely true. One evening, David came across a sentence in a central bank publication. Banks do not simply lend out existing deposits. He read it again. The words were simple. Their implications were not. If banks weren't merely moving existing money, what exactly were they creating? The answer began with something surprisingly ordinary: a promise. Not a vault full of cash, not someone else's savings, a promise. Imagine your mortgage is approved tomorrow. The seller gets paid. You receive a debt. The bank records an asset. No truck delivers money. No vault is opened. A legal agreement is signed. Numbers appear on a balance sheet. And somehow, the economy moves forward. David realized he had spent his entire life thinking of money as an object, something you could hold, count, store. But inside the modern financial system, money behaved less like an object and more like a relationship. A relationship built on trust, time, and expectation. The bank hadn't focused on who David was today. It had evaluated the person he was likely to become, his future income, his future reliability, his future ability to keep a promise. The mortgage wasn't secured by the house. It was secured by confidence in tomorrow. That realization changed everything. Money wasn't created because more cash existed. It appeared because the system believed a new promise could be trusted. The future hadn't simply been predicted, it had been brought into the present. David stepped outside. The city looked exactly the same. Traffic flowed. Construction cranes stretched across the skyline. People hurried past without noticing the invisible agreements surrounding them. Then another thought appeared. Perhaps almost everything around him existed for the same reason. Office towers, factories, universities, railways, businesses, entire cities. None had been built by money alone. They had been built by confidence that tomorrow would arrive. The mortgage on David's desk no longer looked like a financial product. It looked like one thread in an invisible web connecting millions of strangers through shared promises. He looked again at the old photograph of his father. For years it had represented success. Now it represented something deeper, a promise carried from one generation to the next. Maybe this story had never really been about housing, or even money. Maybe it had always been about belief. And every civilization depends on one fragile belief above all others, that tomorrow will come. But what happens when people stop believing? David couldn't stop thinking about one question. If a promise could create purchasing power, why did everyone accept it? Not just the bank, the seller, the construction company, the grocery store, the cafe downstairs. Millions of people accepted digital numbers every day without asking why. The more David thought about it, the stranger it seemed. Every morning, people went to work, collected salaries, paid bills, bought groceries, invested for retirement, made mortgage payments, planned years into the future. Almost every ordinary decision depended on one extraordinary assumption: that tomorrow would arrive much like today. Your employer would still exist, your salary would still arrive, the supermarket would still open, the money in your account would still mean something. One Saturday morning, David walked into a bakery. He bought a loaf of bread and tapped his phone against the payment terminal. The payment was approved. The baker smiled. The entire exchange took less than 10 seconds. Yet almost nothing about it depended on bread. Everything depended on trust. The baker trusted the payment network. The payment network trusted the bank. The bank trusted David. David trusted his future income. Behind one simple purchase stood an invisible chain connecting millions of strangers who would never meet. That, David realized, was the real architecture of modern civilization. Not steel, not concrete, not glass. Trust. Every skyscraper, every railway, every airport, every business. All of them existed because enough people believed tomorrow would resemble today. The buildings were only the visible result. The real foundation couldn't be photographed. It existed inside shared expectations. Then David understood why financial crises spread so quickly. Buildings don't disappear overnight. Factories don't suddenly stop existing. What breaks first is confidence, and once trust begins to disappear, everything built upon it becomes unstable. History had shown it again and again. Banks survived for centuries until people stopped believing in them. Currencies held value until confidence disappeared. Entire economies looked strong, right up until they weren't. Collapse rarely began with concrete. It began with belief. David looked once more at the mortgage agreement on his desk. Weeks earlier, it had looked like paperwork. Then it became a contract. Now it looked like something else, a vote. Every monthly payment silently declared, "I believe next month will come. I believe I'll still have work. I believe this system will still function." Perhaps civilization didn't survive because everyone agreed with one another. Perhaps it survived because enough people continued believing in the same tomorrow. David sat quietly. One final question emerged. If trust is the foundation of every promise, what happens when an entire generation begins to lose confidence in the future? Maybe the greatest crisis wasn't housing. Maybe it was something far more fragile: hope. David couldn't stop thinking about one sentence. The future had been brought into the present. At first, it sounded almost poetic. Now it felt deeply practical. Every mortgage, every loan, every line of credit, all of them did the same thing. They allowed tomorrow to be spent today. David opened his notebook and drew a simple timeline. Today, next year, 10 years from now, 30 years from now. Then he imagined every future mortgage payment already written across it. The line no longer looked empty. It looked occupied. For the first time, David realized something simple. A mortgage doesn't only borrow money, it borrows time. Every future paycheck arrives with instructions attached. Some goes to the bank, some to taxes, some to insurance. Only what remains becomes choice. Debt isn't only about what you owe, it's about how much of your future is already spoken for. Two people may earn the same income. One wakes up with options, the other wakes up with obligations. On paper, they appear equally wealthy. In reality, they are living very different futures. Of course, borrowing isn't the enemy. Without credit, countless families would never own a home. Businesses would never grow. Ideas would never become reality. Credit is one of humanity's greatest inventions. The real question is different. Can tomorrow produce enough to repay what today has already consumed? For decades, the answer was often yes. Productivity increased. Technology advanced. Each generation expected to earn more than the last. Growth made yesterday's promises easier to keep. But David began noticing a change. People were no longer borrowing only to build the future. Increasingly, they were borrowing simply to keep up, to buy homes, to pay for education, to cover healthcare, to maintain a standard of living that previous generations often reached with far less debt. The purpose of credit was quietly changing. It was no longer expanding opportunity. Sometimes it was replacing it. Looking out the train window, David watched another skyline filled with cranes. The city looked prosperous. Yet beneath that prosperity, millions of people were spending each day not only building tomorrow, but repaying yesterday. Then another thought appeared. Perhaps the real price of a house isn't measured in dollars. Perhaps it's measured in years. 30 years, 360 monthly payments. A significant portion of one human life exchanged for a place to live. Suddenly, the old photograph of his father looked different. The house hadn't changed. Brick was still brick. Wood was still wood. But the number of years required to earn that house had changed dramatically. This was no longer just an economic question. It was a human one. Why was the same home demanding so much more of a person's life? David closed his notebook. He had stopped looking for flaws. He had started seeing patterns. And that pattern reached far beyond housing. The final question was no longer how to buy a home. It was far more fundamental. If our future is increasingly borrowed, what kind of future are we creating? Weeks passed. The old photograph still hung in David's parents' living room. The same faded colors, the same brick house, the same smile on his father's face. Nothing inside the frame had changed. Only the person looking at it had. Once, David saw it as a family memory. Now he saw something much larger. A snapshot of an entire system. A time when one set of rules made an ordinary life feel within reach. Study, work, save, buy a home, raise a family. For one generation, that path felt almost natural, not because they were better, but because they were living inside a different set of incentives. Over the past few weeks, David had searched for someone to blame. Banks, investors, governments, developers, interest rates. Each explanation contained part of the truth. None explained the whole. The system wasn't broken by a single bad actor. It was producing the outcomes its rules encouraged. Once you understand the rules, you stop confusing them with the players. Bankers respond to incentives. Developers respond to prices. Politicians respond to voters. Investors respond to returns. Most people aren't writing the rules. They're adapting to them. So are we. David looked across the city once more. The apartment towers, the cranes, the office buildings. They no longer looked like causes. They looked like consequences. Visible results produced by invisible systems. Then something became clear. This story had never really been about housing, or mortgages, or even money. Those were only the surface. The deeper story was about the invisible architecture shaping millions of human decisions every day. And suddenly, David noticed the same pattern everywhere. Education, healthcare, technology, inflation, artificial intelligence, politics. Different headlines, the same question. What system is producing this outcome? For years, David had tried to understand events. Now he realized he should have been studying the structures beneath them. Trying to understand the world without understanding its systems is like watching waves without knowing there's an ocean underneath. He smiled, not because he had found every answer, but because he had finally learned how to ask better questions. Instead of asking, "Why are houses so expensive?" ask, "What makes them expensive?" Instead of asking, "Why is inflation rising?" ask, "What system creates money?" Instead of asking, "Why is society becoming more divided?" ask, "What incentives reward division?" The quality of your answers depends on the quality of your questions. Before leaving, David looked once more at the old photograph. His father had never meant to teach him economics, yet somehow he had. Every generation inherits a world it didn't build, but every generation has the opportunity to understand that world more deeply than the one before. Outside, the city continued exactly as it always had. Loans were approved, concrete was poured, markets opened, people hurried to work. The system kept moving. Most people would never stop to ask why. Perhaps that's why it remained invisible. If you've watched this far, you're probably searching for something deeper than financial advice. So are we. Because underneath isn't about predicting the future. It's about understanding the invisible systems that quietly shape it. The incentives beneath the headlines. The structures beneath everyday life. The forces that influence your future long before you notice them. So the next time someone says, "That's just the way the world works," pause. Ask one more question. What is underneath? Welcome to Underneath.